I'm Vito Anthony Casella, broker, record, and owner of Remax Noble Corp Real Estate, and I'm here today with Mark DeLelio from Secured Mortgage Experts. We've been chatting quite a bit over the last couple of days about some dialogue pertaining to the real estate market and mortgage rates and the financing side in general as well. Trying to debunk a little bit of what people are hearing going on out there. There's no hiding it. Over the last year, many of you guys have heard from my posts, my stories, that they put a Band-Aid over a bullet wound. That's all. This continues to be a supply and demand issue. We're a growing country. 70% of new immigrants coming into our country are calling the GTA home. And the fact of the matter is we're not building homes. Actually, we're not building homes, period, right now at a rate that we should be to accommodate. Rental rates as well are not helping this in terms of accommodating. People are starting to even find it financially a little easier to purchase, even as they're considering interest rates to be so high. But the truth of the matter is we've seen a complete 360 from last year with what we were hearing. Now, we believe the aggressiveness in the market has helped to shift the narrative again, where we're hearing about interest rate increases starting to potentially happen over this year or the balance of this year, to try and calm inflation again. But the fact of the matter we still continue to have is, we believe, supply and demand issue. And now what's made it even worse, we are starting to see, is buyers have adjusted to the concept of what these new mortgage rates will look like. Mark, why don't you chime in on the inflation and what you're seeing out there on the lending side?
So let's talk about, I guess, where we are today with respect to rates. So when we speak about rates, we're speaking about both. Like, we're looking at both fixed and variable rates as it pertains to borrowing. At the end of 2022 and into 2023, we were seeing fixed rates starting to trend downward. And the sentiment overall was that we were going to see that trend continue throughout 2023 with possibilities of some sharper declines. That hasn't really fully happened. Rates on the fixed side have been kind of going up and down, fluctuating, but within a certain margin. So we're seeing variances of 15, 20, 25 basis points up and down. We're not seeing huge spikes, and we're not seeing huge declines. So what Vito was saying earlier with regards to clients and borrowers and their sentiment in terms of the market is they're comfortable with the fact, where as it relates to rates, that they're kind of stuck in this space. And people have adjusted to that, and people are out there now with respect to buying with that comfort level, knowing where rates are. Now, what's happened over the last couple of weeks with fixed rates, and then I'll get into variable rates later, is we have seen some spiking of fixed rates over the last little while. What happened with that regard is we saw a little bit of an increase in inflation in April. That inflation increase kind of stirred the market a little bit and caused a little bit of a panic. And that impacted the bond yields, which obviously impacted fixed rates. Now, when we're looking at that little spike of inflation in April of this year, the biggest driver of that increase in inflation has been related to interest costs, the cost of borrowing. So that driver of inflation from that month has directly been related to interest rates specific to borrowing, which impacts rent. Now, as a landlord, when you have increased costs to fund your property, you're passing that on to the consumer.
You brought up a great point, Mark. We got immigration coming in. These are people that are coming in, most of them with money as well, and an opportunity to jump into our employment. They need a place to live. Whether it's renting, many of these people within a couple of years can afford to buy as well. They're qualifying, right? And I guess back to your point there, we have a supply and demand issue that is not even being addressed properly because we're still holding back development And let's face the facts, not everybody can live in a
Right.
condo,
Yeah. No, for sure.
right? So number one thing we keep hearing about is how condos are being built. Like it's crazy to see that applicants from a rental aspect, we got families of 4 that are trying to rent out a 1+1.
For sure, and we're seeing that a lot. Now, the other piece of the pie here, Vito, and we were touching upon it again earlier, is a lot of the factors that we look at when it comes to inflation. And I guarantee if anyone looks at this data, looks up the information, and they look at what's driving it, and the Bank of Canada really is looking at some core numbers. So every time they make a decision, and next week's the next decision. And I talked about fixed rates earlier, and what I see happening is they're going to be going, up and down slightly throughout the year. People are comfortable with that level, and what I'm saying with regards to those rates are, mid fours, fives, 5.25 in that range, okay? Now, variable rates is a completely different story. Those are directly related to the overnight lending rate. And when the Bank of Canada makes their announcements, which they're going to be doing next week on June 7th, that directly impacts the variable rate mortgages. So separate from what I was talking about earlier. What we're seeing here now is that same kind of idea that while inflation went up a little bit in April, the Bank of Canada is going to jump and make a change to the overnight lending rate, which is going to impact the variable rate mortgages. Now, my opinion may not be what everyone else's opinion is. And what I said earlier was the biggest driver of inflation in April was interest rates. There are so many different factors that they look at as to what drives their decision. One is, GDP growth. We saw that. We saw yesterday. The report came out that the economy grew bigger than what was expected. The other is the employment, labor. The labor force is strong. We're at record low unemployment levels. What's driving these figures? You look at what happened over the course of Q1, we talked about it, immigration. We are letting in a large number of immigrants into the country. They're coming here to work, they're coming here to live. These are all driving those inflationary numbers up on the side of housing, okay? Not housing from the value as it relates to the value of a home, but driving up housing costs as it relates to living in a home.
Yes.
So that's what we're seeing. What my prediction would be is I hope that when the Bank of Canada looks at all these figures, they maybe take a step back again.
To what Mark was just saying is there's a lot of opinions out there. There's a lot of misguidance out there. And the fact of the matter is there's a lot of people that are being affected because of everything they're hearing. It is a little scary for anybody who's trying to time being in a market. So I guess the one thing I'd like to suggest here is I saw many people last year make a huge mistake when they had an opportunity to marry the price and date the rate, and they messed up. Market showed quite a bit of weakness, and there was an opportunity to capitalize, and many of them have now since paid the price because they didn't take that step. The craziest thing is all the pre-approvals that we're throwing out there, Mark, and all these people that have come in, many of them now are a lot more aggressive with their tonality than they were
For sure.
6
Yeah.
months ago, because they're realizing that they just rather, if I'm qualified, let me buy something now as opposed to trying to time it, because the truth is the market's increasing in value again. We're seeing multiple bids again on many properties, not even just nicer homes. Okay, and we still are lacking a supply for our demand. So I guess moving forward here, I think the biggest piece is we are going to hear consistent rumblings about inflation and inflation and inflation. Interest rates are always going to be trending up and down. And I guess the craziest thing is we still do have record low interest rates, regardless of what people were accustomed to a couple years ago.
For sure. And I think on this spectrum here is last year, when I say last year, I mean near the summer when inflation was really peaking, and we saw direct impact on real estate. We saw prices come back down to levels that were kind of pre-COVID. February, March of last year was kind of insane, but we're starting to see some stability, some more certainty. Now, not 100% certainty, but people are more confident to go out and buy, are more confident to go out there and say, okay, this is the realization, these are the rates. And we are, historically, rates are still low. And I believe the comfort level as to what the economy should be withstanding are rates between 3.5% and 4.5%. Long term, like that's where rates should kind of be within our economy. The idea of seeing another period of time where rates are 1.5%, 2.5%, I think that's in the past. And I think we have to get our minds and heads around the fact that we're not going to see that. Not anytime soon, anyways. So that 3.5%, 4.5% range is kind of where I think rates should be for a healthy economy. We're above that now. So the idea would be speak to a professional, speak to us, myself. When you're looking at getting a mortgage or getting qualified and looking at terms, let's find out terms that work best for you. Like right now, the trend is people going into shorter term mortgages. They're going into 2 years, 3-year mortgages. Granted, the rates are higher on that side, but people are willing to take that shorter term pain as it relates to the cost, with the idea that rates will, they will come down. And when they do come down, they capitalize on the lower rates at the tail end of that.
That means everybody too, but right. So I guess to debunk something as well, I want clearly understood before we end this here. Many people have said to me, well, is there going to be an opportunity where people can't afford their homes anymore? There's always an opportunity. That's number one, it's no news, brand new news. That's been consistent year over year. People have been impacted in many different ways and why they've had to move on from their homes. But people are thinking more so now than ever. Well, I guess I got to put it out there. We have people that there might come a situation where they might be impacted financially, but they still need somewhere to live. So the truth of the matter is they might be selling a bigger home, downsizing to a smaller home. There's still going to be a purchaser in a market. And the issue with that is when there's not enough supply to meet this demand, how you are envisioning capitalizing on buying something, it doesn't exist. Stop sitting on the sidelines. That is not a game plan. That is not a business plan. And yes, purchasing a home, regardless of it your primary residence or not, will always be a business. You need to factor that into your decision making. And as Mark said, trust the professionals you're working with to get the best advice you can in making that decision. But you should have bought it yesterday. That is the truth. Don't allow yourself to be impacted more on decisions you can't control. The one decision you can control is starting to get out there today to help yourself buy what you might need to live in, because rental rates are through the roof, no supply to meet our demand, and we are a growing country. Do not sit around and continue to wait.
Yeah.
Stay tuned. We'll continue to provide updates. Thanks, Mark, as always. And you guys will have our contact details down below for you guys to reach out if you have any questions.